Hello and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. A lot of discussion about the debt ceiling. Let's take a look at bond markets, specifically corporate bond spreads, not showing a lot of concern from the bond market risk side of things. Labor market, all eyes on when we start to see weakness in the labor market given the high interest rates. Weekly jobless claims starting to trend higher since the month of September last year. And finally, the Fed's expecting potentially a 1% increase in the unemployment rate. We look back historically, during recessions, they tend to underestimate the stress on the labor market. So on the chart here in the blue, we have US corporate index option adjusted spread, right? So that's the difference between risk-free treasuries and corporate bonds. The higher that is, the more yield, right? The more risk that investors are requiring of these bonds. And it typically spikes during recessions, during sharp drawdowns, really when the market takes a risk off attitude. A lot of talk about the potential volatility of the debt ceiling on June 1st deadline. Remember, that is the date when the US Treasury is expected to run out of cash and run out of the ability to pay their long-term bills, right? Now, why is that important? Well, equity market VIX is still below or right around 17, right? Very low. Corporate bond spreads not elevated. Capital markets risk are not anticipating volatility. My take, they are anticipating a repeat of history. Some way, somehow, Republicans and Democrats will come together to find a way to avoid default. Most likely scenario, obviously that ceiling is going higher, potentially some cuts in future spending increases. That's what the Republicans want. Most people say some way, somehow, they're not going to want this on their records and they'll avoid that debt ceiling issue. Labor market, US jobless claims continue to trend higher, up most recent week 22,000 compared to the previous week, up to 264,000 continuous jobless claims. That's the highest number since several months ago, early 2022. That continues to trend higher since early September. We're starting to see some weakness in the labor market, specifically, obviously, the layoffs in the tech sector earlier this year. It's starting to become a little more widespread, slowly trickling higher into that higher continuous jobless claims. Okay. And finally, the Fed, right? The Fed's two dual mandates, inflation down around 5% year over year, with the most recent months reading in April. Jobless claims elevated, but unemployment rate around that 3.5%. This chart looks back historically since 1969. The Fed dot plot expectations of what the change in the unemployment rate, right? How much increase in unemployment was the Fed expecting relative to what actually happened? And you can see they typically underestimate it. In fact, the average misestimation was 2.5%. So when they expected 1%, it was actually 4.5% on average. And that's exactly this time. If you look at the Fed dot plot, they expect a 1% increase. That unemployment rate around 3.5%, the Fed expects that to go up just north of 4.5%. If history repeats itself, we might be looking at an unemployment rate closer to that 6% marker and much more stress in the labor market than most anticipate. And finally, little inspiration, 81-year-old man out of Canada, British Columbia, continues to get outside and exercise. And I think that's an understatement when I say exercise. In fact, he's 81, lives in a bus in the mountains of Canada, and comes out and races in what's called the Canadian Death Race. It's 125 kilometers for us global metric folks, and 78 miles for us in America. 78-mile run, right? It's an ultra marathon distance. He's done it 8 times. His first one was when he was 62 years old. He was the oldest competitor in that race. He finished the entire race several times. Most recently, he's been participating, hasn't been able to finish under the allotted time, but still out there, continues to be the oldest participant. A good reminder, healthy, pushing it into his old age, a true inspiration. So a hat tip that I don't have on to you, Mr. Don't know how to pronounce your name, Dag Abai, maybe. But congrats and great. Keep going. That's a great story here. With that, I want to thank everyone for watching, and we'll see you next time.